One of the common questions that we get are about taxes. And I think we go through the year, we kind of put our blinders on, go to work, do the things that we want to do, hopefully save for retirement, save for those goals that you have. And then when time for tax time, you gather the 1099s and the W-2s from the different vendors and different employers that you might have, and you bring it to your tax person, you drop it off, and a couple months later or a couple weeks later, they send you the information, you sign it, send in any payments that you owe the government or get a return back, and then the cycle starts over. So one of the things that we try to really hone in on and talk to people about is navigating taxes during the year or certainly throughout your lifetime. One of our goals is to try to reduce your tax bill over your lifetime and try to keep Uncle Sam out of your back pocket a little bit or out of your family's back pocket if legacy is important to you. So one of the things that we really talk to people about is managing that tax liability in retirement. You might have part-time income, you should have Social Security income, you might have a pension, but really try to maximize some of the tax brackets that we currently have, and also at the same time, live for today and try to limit and pay the taxes due, but also don't pay more than you have to. So, their ordinary income tax rates, range from 10% all the way up to 37%, depending on how you file, depending on what your income is. And there's different categories and different assets that you own that are taxed differently. Okay, so ordinary income is going to be like an IRA, a traditional IRA, I should say. Ordinary income would be part-time income. Ordinary income might be taxes on Social Security if you're in a spot where you pay some taxes there. Ordinary income would be pensions. So those are income, or maybe rental income that you have. Then we have qualified dividend and long-term gains tax brackets. A long-term gain would be the sale of a stock that you've owned more than a year, the sale of farmland, the sale of a second home that has appreciated in value. Typically, those assets are taxed at a different rate. And those go from 0, 15, and 20% depending on which ordinary income tax bracket that you fall into. Dividends are the same thing. So if you have a stock that produces dividends and it's qualified, that also falls into a lower tax bracket. And then we have a tax exempt rate. And tax exempt rate would be distributions maybe from Roth IRA, municipal bond income, those things that would not be taxed at all based on the asset that they are. So as we help people in retirement, our goal is to help navigate that tax landscape and, depending on what kind of assets they own, try to maximize, those lower brackets where we can on the ordinary income tax. If they have, capital gains type assets or dividend assets, certainly try to position them so that we can pay zero or low tax on those. And obviously, if they're in a high bracket on the ordinary income rate, we want to really look at some tax exempt assets to own outside of IRAs, so that you can overall have more money in your back pocket at the end of the year when you pay your taxes. And obviously, one of the other things that we talk to a lot of people about is maximizing Roth contributions, or even what we can get in that Roth IRA over time, or what we can convert to that Roth IRA if we have IRA assets that we can kind of realize at a low tax bracket. The other thing we talk to people about are some terminologies. What is an RMD? An RMD is a minimum amount that you have to take from your IRA when you hit certain ages. And for most people today, that's age 73. If you were born after 1960, that will be age 75. So every year you have to calculate a minimum distribution that you take from any pre-tax assets, so 401k, 403b, traditional IRA, where you are required to take a distribution. And that requirement is from the government, from the IRS. We also talk about QCDs, and those are qualified charitable distributions. So if you are over 70 and a half years old, you have the ability to make a direct contribution to a charity from your IRA and not pay tax on that distribution. When you do that, you have to notify your tax accountant or CPA that you did that direct contribution. So let's say I was 71 years old today, and I wanted to give my church $5,000. That's my monthly, or that's my annual contribution pledge. I can do that directly from my IRA, and it goes to, in my case would be First English Lutheran Church. Goes there. I notify my accountant that I made a $5,000 contribution to my church directly from my IRA. And then they note that on my taxes, and I don't have to pay taxes on that distribution. The other thing we talk to people about is Roth conversion. I mentioned this a little bit earlier, but if we can take advantage of historically low tax brackets that we currently see, whether it be a 12%, 22% bracket, a lot of times it's in your best interest to do so. And we try to help people navigate that by using some tax software to do that. But if we can move money over to Roth, pay 12% taxes on it, and then that money grows in the Roth for the rest of your lifetime, not paying taxes on any of the gains, you can take a distribution if you'd like and not pay taxes on any of those distributions. Or if your children or whoever inherits it, they do not have to pay taxes on distributions either. So the Roth conversion, it can be a powerful tool to help leverage some growth and some assets over time, so that either you or your family doesn't get hit with a large tax bill in the future. Again, it's our job to help navigate some of this tax landscape. If you have questions, certainly reach out. We're here to help. If nothing else, just to have a conversation. Not all of these things will be the right thing for you, and they won't pertain to you. Not all of them, but some of them might. And having a conversation with a financial professional can maybe help shed some light to all of these things, and help you understand, how to take advantage, legally take advantage of the tax brackets that we have. Thanks for watching. Have a great day.